Hello and welcome back to part 2 of the Introduction to Bookkeeping mock exam walkthrough. Hopefully you enjoyed part 1 and hopefully found part 2 as equally useful. Remember, if you do find it useful, make sure you hit that like button and subscribe to the channel. Anyway, let's get over to the mock and pick up where we left off back on task 7. Right then, so task 7 is worth 8 marks and is about processing transactions in the cash book. This task contains part A and B. 2 amounts have been received as shown in the receipts listing below. And we can see that we've got one from a credit customer, Ben Silvers, for £474, including VAT, and that was paid by cheque. And then we've got another one, but this one's a cash customer for EPD and Co. for £189 plus VAT. Part A then says complete the debit side of the cash book by first making the necessary entries, and then totaling the cash and bank columns. And this is for 7 marks, so it'll be 1 mark for each box. So we'll start with the first one then, which is Ben Silvers. So this one is a credit customer, and we've received a cheque for £474, including VAT. Now the absolute key part to this is knowing that the original sale would have already been recorded. So because this is a credit customer and this is the payment that we need to record, the actual original transaction when they first made the sale would have already been recorded as credit sales, credit VAT, and a debit to our receivables ledger control account. Now the part that we're recording here is the payment from that customer. So what we would do is we would debit our bank account for the full amount of £474. Now the VAT, as I've just said, has already been recorded, so we don't need to do anything on the VAT. However, it would be a credit within our trade receivables account. So we would record the full amount of 474 within our receivables. So what you've got to think of is how would that look in my trade receivables account? So initially we said that we recorded it as a debit within our trade receivables. So the reason for this is it's an amount owed from our customers, so it's an asset to the organisation. So we know to increase the balance on an asset account, we need to debit it. Now this section that we're recording here is the payment from that customer. Now obviously once they've paid, that will reduce our trade receivables, our receivables ledger control account, because they no longer owe us that £474. So to reduce the balance on an asset account, we would credit it. So it would be a debit to our bank to say we've received the money, and a credit to our trade receivables to show that they no longer owe that money. Now the next one, EPD and Co. This is a cash customer. So remember, we wouldn't have recorded this within our accounts as of yet. So this is going to be the first point at which we will enter this transaction into our accounts. So what we would do is we would debit the cash account. Now we need to debit the cash with the full value, so the total value. So that's the amount including VAT. So we need to work that out because it only gives us the net amount here of £189 plus VAT. Now I think it's safe to assume here, because it doesn't say otherwise, that VAT will be charged at the standard rate of 20%. Okay, so firstly, let's work out the gross or total amount. So it would be 189 plus 20%, which works out to be £226.80. So what we would do, we will record the gross or total within our cash column, because that's the actual amount that we've received. We can leave the bank column blank because it obviously doesn't affect the bank because it's a cash customer. Now we do need to record the VAT. So as I said, this is the first point at which we're recording this transaction, and therefore VAT would need to be recorded. So the VAT, we can do this in different ways. You can either do the difference between your total that we've just worked out and the net amount, so the 189, or you can just do 20% of 189, i.e. the net amount. Either way, that works out a VAT of £37.80, so we can enter that in. We don't touch our receivables. Obviously, the receivables column is only there for credit customers. However, we then do lastly enter in the net amount within our cash sales column. So that would simply be our 189. So we've now made the necessary entries. All we need to do now is total the cash column and the bank columns. So that would simply be adding our figures together. So the balance brought forward, and then the transaction from EPD for the cash column, and the transaction obviously for Ben Silver's and the balance brought forward in the bank column. So add the two columns together and we get a total for our cash column of £1,263.04. And then in the bank column, we get £20,356.16. Okay, so within this question, I would expect you to see something very similar to this. So in this one, we're looking at the debit side, i.e. income to the business. Obviously, it could be the other way. So you may get the credit side of the cash book, where we'd be dealing with payments. However, they are dealt with in a very similar way. Just be aware whether it's a credit customer or a cash customer, and that will affect obviously which columns that you need to enter your transactions into. However, I'm hoping that you have had some practice of these ones within your textbook and other mock exams. So hopefully by the time you're going into your real exam, you should be quite confident with this one. I honestly can't see them throwing any curveballs in there. So as long as you're happy with what you've done previously, you should be fine in the real exam. So moving on to part B then, it states the credit side of the cash book shows the total bank payments were £12,664.11. Part B, calculate the bank balance and use a minus sign if your calculations indicate an overdrawn bank balance. So in part A of this question, we've calculated the debit side of the bank column, and that is your £20,356.16. We've now been given the credit side of the cash book for the bank column. So all it wants us to do is calculate the balance. So nice and straightforward, it would simply be the difference between our debit side, which is our £20,356.16, and our credit side of £12,664.11. So it's just the difference between the two figures, which works out to be £7,692.05. Now we know that this is a positive bank balance because our debit side, which records our income, is higher than our credit side, with the credit side recording our payments. Okay, so if your debit side is higher than your credit side, it would be a positive balance. If it was the other way, and your credit side was higher than your debit side, i.e. your payments were higher than what you'd received, then it would be an overdrawn balance. However, in this question, with your debit side being higher, it would be a positive bank balance. So that covers task 7. Let's now move on to task 8. So task 8 is worth 6 marks and is about processing transactions in the petty cash book. This task contains parts A through to C. Keane & Co. keeps an analytical petty cash book and withdraws cash from the bank to restore the impressed amount at the end of each month. On the 30th of September, there was one final petty cash payment to be recorded. An amount of £32.64, including VAT, had been paid for travel expenses. Part A then, calculate the VAT and net amounts to be recorded in the petty cash book. So in this one, we've been given the total amount, so the gross, and all we need to do is work backwards to calculate the net and VAT values. So remember, when calculating VAT, your net amount is 100%. Your VAT is 20% of the net, meaning your total is 120%. Okay, I'll say that once more. Your net amount is 100%. Your VAT is 20% of your net, i.e. 20% of your 100%. And your total is therefore 120%. Okay, that's really helpful when we're working backwards. Now I know that there are other methods that you can use. We can divide by 6, etc. I appreciate there's other methods. If you're comfortable with those, stick with them. That's absolutely fine. The reason why I'm showing you it this way is because further down the line, particularly within your costing units, you will have to calculate from gross amounts back to net amounts. You will also have to calculate back sales to what we call cost of sales, which I obviously won't go into detail now. However, you will be expected to understand percentages to a higher level than where you're potentially at now. Maybe not, but maybe it will be. In which case, getting used to calculating these based upon percentages is a good habit to get into. So, the way I would calculate this, knowing that the total is 120%, I would do £32.64 divided by 120, because that gets you 1%. Now, once you've got 1%, we can then multiply that by 20 to get the VAT amount, or we can multiply that by 100 to get the net amount. Okay, so 32.64 divided by 120 multiplied by 100 gives you a net amount of £27.20. Now, if we do the same thing for the VAT, it will be £32.64 again, divided by 120, multiplied by 20 to get the VAT. Okay, moving down to part B then. Before the petty cash payment in A was recorded, travel expenses of £49.55 plus VAT had been entered into the petty cash book. Part B, calculate the total of the travel expenses analysis column after the petty cash payment in A has been recorded. Okay, so we've got two transactions here now. So in part A, we recorded this travel expenditure as £27.20. Now we've also got a transaction, it's saying here, of £49.55, again for travel expenses. So all it wants to know is how much did we spend on travel expenses. So all we would need to do is simply add the two net amounts together. So it would be £27.20 from our transaction in part A, plus the previous travel expenses of £49.55, and that would give you total travel expenses of £76.75. Okay, very important here that we use the net amounts, not the total amounts. Okay, the reason being we can claim VAT back on travel expenditure, something that you will cover in detail if you go on to level 3. So because we can claim that VAT back, we need to record the actual expense to the business, which is just the net amounts, which in this case was your £27.20 and your £49.55. Okay, so moving on to the last part of the question then. After all of the petty cash payments had been made, an amount of £23.22 was left in the petty cash float. This agreed with the total of payments of £226.78 recorded in the petty cash book. On the 30th of September, the petty cash impressed amount was restored. Part C, identify the entry required in the petty cash book to record this transaction. So on the face of it, this may seem like there's quite a lot to digest. However, actually, it's fairly straightforward, so definitely nothing to panic about. So if we've paid out of our petty cash book £226.78, it says absolutely nothing about receiving any petty cash amounts. So we can safely assume that this is the only amounts of money that have left the petty cash balance without anything coming in. So to restore it to its impressed amount, it would literally be the amounts that have gone out, i.e. your £226.78. So all we need to do is pay that back into the petty cash, and that will bring us back to the original impressed amount. So all we would do to record that is first select the account where this money is coming from. So obviously it's got to come from our bank account. Okay, so it would be bank, and we'll be reducing our bank balance here. It would be a credit within our actual bank account because we're taking out £226.78. So we can enter £226.78. And it would be, as I say, a credit within our bank. But remember here, we're identifying the entry required in the petty cash book. Okay, so we would credit the bank for £226.78 and we would debit the petty cash book. Remember, it's an asset and we're increasing the value by £226.78. So it would be a debit. Okay, we know to increase our asset, it would be a debit. Okay, our bank is also an asset. We're reducing that because we're taking the money out of our bank. So it would be a credit within our bank, debit within our petty cash book. Okay, so that covers task 8. Let's now move on to task 9. So task 9 is worth 6 marks and is about processing recurring entries. This task contains parts A through to C. A new transaction has been arranged as shown in the note below. I have today agreed to rent out office space to Gordon Glass for a period of 6 months. Gordon has arranged for an amount of £390, including VAT at 20%, to be paid by standing order on the first day of each month, starting on the first of the next month. Please set up a recurring entry. Okay, so part A states set up the recurring entry in your digital bookkeeping system for 4 marks. So we can see we've got 4 boxes to fill out here, so it will be 1 mark for each box. So these aren't too bad at all. It's become a bit of a recurring question, pardon the pun, with it being recurring entry. Maybe something that seems a little bit complex at first, but I think once you've done a few, they're not too bad. So basically all we need to do is take out the information from our question and put it into these boxes. So the first thing we've got to do is select the start date. Now it states within here, starting on the first of the next month. Bear in mind we're in May. So that would simply be the 1st of June, which is the first of the next month. It then states that it's for a period of 6 months. So our end date would be 6 months from our start date. So that would simply be the 1st of November, obviously 6 months from the 1st of June. It's already filled out that the frequency is monthly. So we next need to fill out the net amount. Now it states here that Gordon has arranged for an amount of £390, including VAT. So we need to work out the net amount from this total amount of £390. So remembering what I said earlier, the way I would do this, bear in mind the total is worth 120%. I would do 390 divided by 120 to get 1% and multiply it by 100 to get our net amount. So that gives you a net amount of £325. It also states then within the question that VAT is at 20%. So for our last box on our VAT code, we're hoping to see VAT number 4, 20%. Okay, and that's it for part A. Okay, so it is literally just taking the information from the question and entering it into the boxes. Again, once you've done a few of those, I honestly don't think that's too bad at all. So moving down to part B then, it states when the recurring entry is processed, the message below is displayed. Part B, respond to the message by selecting the appropriate general ledger code for 1 mark. The general ledger account you have selected is not valid for a recurring payment or receipt. Please select a valid general ledger code. So we've got a few options here. Let's have a look what we've got. So we've got bank, we've got payables, we've got rental income, and we've got rent paid. So all we need to do, go back up to our question and let's have a look or remind ourselves what it's for. So it states, I have today agreed to rent out office space. Okay, so we as the business are renting out the office space. So it's going to be income for our business. It's not rent that we're paying. Okay, we're not renting out the space. We're renting it out to somebody else. Okay, so in terms of the general ledger code, the most appropriate one out of these would be rental income because it's money that we're receiving as a business for office space that we're renting out and therefore rental income. Okay, moving on to part C then. It states identify one effect of processing the recurring entry. So we've got three options. It says entries will be posted to all relevant general ledger accounts. We've got entries will be posted to the purchase ledger and all relevant general ledger accounts. And then lastly, funds will be transferred to Gordon Glass's bank account. So let's think about each of these and see if they display the correct effect. So the first one, entries will be posted to all relevant general ledger accounts. I mean, that is absolutely true. It will be. So it would go to the bank account as a debit entry because it's income, and it would be credited to our rental income account because that's an income account. We know that income accounts increase with credit entries, or should I say increase in value with credit entries. And both of these accounts, the bank and rental income, are both within the general ledger. So that is definitely correct. Now it does state identify one, so we can assume here that the other two are incorrect, but let's just have a quick look and make sure that they are incorrect. So entries will be posted to the purchase ledger and all relevant general ledger accounts. Now, see the issue with this one, it would be posted to the general ledger accounts, that's what's in statement 1. It would not be posted to the purchase ledger. So think about what I said earlier, this is income. So it's definitely not going to go to any purchase ledger accounts. We're not buying anything, therefore that one would be irrelevant. And then the last one, funds will be transferred to Gordon Glass's bank account. Again, it's income. So Gordon Glass will be the one that is paying our business. So we're definitely not going to be paying them anything. They're the ones renting out the office space. So that would also be incorrect. So that finishes task 9. Hopefully nothing too complex, but again, if there is any questions at all, drop them in the comments below and I will happily pick those up for you. Okay, we can now move on to task 10. So task 10 is worth 10 marks and is about transferring data from the books of prime entry. This task contains parts A and B. These are the totals of the debit side of the cash book of Cook and Co. So we can see here we've got the debit side of what it looks like an analysed cash book because we've got some extra columns on there. We've got our VAT, receivables and cash sales, something that looks hopefully somewhat familiar from what we did earlier within this mock. So part A says show the entries to be made in the general ledger accounts below. Okay, this is one that I know people have struggled on in the past. It is learning the format, learning to understand how double entry works. Once you've got that, it's dead straightforward, but I appreciate getting to that stage is a challenge. So don't worry if you found this difficult in the past. It will get easier the more that you do. Okay, so what we need to do is we need to take the values from our VAT, our receivables, and our cash sales. Hopefully that's fairly obvious given the account names have been given to you here of cash sales, VAT, and receivables ledger control. So let's first enter the amounts in. So we can simply take our amounts from our table here and enter them next to the relevant account. So cash sales, £3,810.50. VAT, £762.10. And then receivables ledger control, £16,806.60. Okay, all we now need to do is decide whether they are a debit or a credit. Now, given that we are on the debit side of the cash book, okay, it simply means then that these analysed columns to your VAT, your receivables and cash sales are going to be credit entries because we've either debited the cash or debited the bank column and then credited one or more of these three columns. Okay, so if we think about the transactions, a cash sale, when we're recording it, we would debit the cash column for the gross amount, we would then credit the VAT for the VAT amount, and we would credit the cash sales for the net amount. Okay, so that covers your cash sales and your VAT amounts. Think about your receivables ledger control. It's the same as actually what I mentioned earlier within the mock. This is the recording of the payment from the customer. So we would record that by debiting our bank account for this £16,806.60, and we would credit our trade receivables or our receivables ledger control account to lower that asset account. Okay, remember the amount shown within the receivables ledger control is how much our customers owe the business. It's an asset. However, when they pay, which is what we're recording here, we need to lower that back down. And we lower the value of an asset account by crediting it. So for each of these, they would all be credits to their respective accounts. Okay, now I know there's a lot of memorizing that goes off with these particular questions. However, I would really push that you try to understand why these are what they are. And the reason why I say that is because in your next exam, which is processing of bookkeeping controls, there is a lot more testing of your understanding. So it's not uncommon for someone to absolutely fly through this exam and then in the next unit struggle quite a lot because of that testing of your understanding. So if you just memorize these, it does make it so much harder. So if you can, really try work on these, try to understand your double entry principles, and it will really help going forward. And again, if there's something that you don't understand from what I've been through within these questions, just drop it in the comments below and I will pick those up for you. So moving on to part B then, it states the sales returns, purchases and discounts received daybooks have been totaled and all amounts have been transferred to the relevant general ledger accounts. It then states identify the entries in the receivables and payables ledgers. So the first one we've got then is the sales daybook. So obviously anything related to sales is going to your receivables, anything related to purchases is going to your payables. So we know that the first two both relate to sales. So we're going to be dealing with the receivables ledger. Now, when we record a sale, that would be a credit to your sales account, credit to your VAT, and a debit to your receivables ledger account to show that we have a customer that owes us money. Now, anything that reduces that amount owed, such as your sales returns, if the customer pays, for example, if we give them a discount, all of those will reduce how much they owe to us and therefore be a credit within our receivables ledger control. So our sales returns would be a credit because it's reducing the amount that is owed to us. Now, purchases and discounts received both relate to the payables ledger. A discount received is something where we, as a business, have been offered a discount for paying early. Okay, discount received only record prompt payment discounts. They do not record bulk or trade discounts because these would have already been taken off on the invoice. Whereas discounts received is taken off after the invoice has been issued because we don't know, obviously, whether the business is going to take it or not. If we don't pay promptly or within the given time period that they've offered the prompt payment discount, then it wouldn't apply. Okay, so let's think about firstly, how do we record a purchase on credit? We would debit the purchaser's account, we would debit the VAT account, and we would credit the payables ledger control account. So this really is the opposite to our receivables ledger. This is where we've bought something from a supplier on credit. Okay, so we owe them that money. So it's therefore a liability. So to increase a liability, we need to credit that account. The more we buy on credit, the more we would credit the payables ledger control. However, anything that reduces that amount, so lowers the amount that we owe to our suppliers, would be a debit entry within the account. Okay, we lower the value of a liability account with the debit entry. So our discounts received, for example, where we're receiving a discount for paying early, would reduce the amount that we owe to our suppliers, and therefore would be a debit entry in our payables ledger. Okay, hopefully you found that useful. Let's now move on to task 11, which is our last task. So task 11 is worth 10 marks and is about totalling and balancing ledger accounts. This task contains parts A and B. The customer account below is ready to be totaled and balanced at the end of October. Part A, complete the account below by dragging the following entries into the account. So we've got the balance carried down, the totals, and it says you may use each total more than once, and then finally the balance brought down. So the first thing that you need to take note of here is that this is a customer account. So this account is showing how much they owe to us. So anything that increases the amount that they owe will go on the debit side. Anything that decreases the amount that they owe will go on the credit side. Now, it's unlikely that the account will have a credit balance on unless they have paid over what they owe, sometimes known as a payment on account, that they can offset any future invoices against. However, just looking at the figures quickly here, I can tell that that's not the case, so they're being nice and kind. So the way I would start this question is first add up your debit entries, note that down, add up our credit entries, note that down. I would then do the difference between the two sides. So if we add up our debit entries, add up our credit entries, and do the balance between the two, so the difference between the two, that comes to 5,140. Now remember, your balance carried down needs to go on the lower side to balance off both sides, basically to get both sides to equal the same amount. Now in this example, as we would probably expect, the debit side is going to be higher than the credit side. So you would take your balance carried down of 5,140 and drag it in onto the lower side, which is the credit side. So now both sides match up. And if we total them, they come to 14,909. So what we can do is we can drag our totals in on both sides. Now what happens is at the start of the following month, our balance is brought down and it would flip back to the higher side of the account. Okay, so it's basically giving us our starting balance on the account at the beginning of the next month, which would be the 5,140 on the debit side, because the debit side is higher. So the balance carried down balances off the account at the month end, as we can see here, so that both sides match. That is then brought down back on the opposite side of at the start of the next month. So hopefully that explains part A. We can now move down. So it states the following three accounts are in the general ledger at the close of the day on the 31st of October. Part B, identify the entries required to record the balance carried down in each account. So we need to use the same technique here as we've done in part A. All we need to do is basically add up our debit side, add up our credit side, do the difference between the two sides, and then it's asking for the balance carried down. So it would be the amount that is going to go on the lower side. So let's start with the first account, GL012. So we want to add up our credit side. Obviously we don't exactly need to add up our debit side because there's only one transaction. And then do the difference between the two sides. So the difference between these two sides is 785. So let's enter that in. And then remember, because it's the balance carried down, we're looking for the lowest side, which in this example is going to be our debit side because our credits are higher than our debit entries. So the balance carried down will therefore go on the debit side. Now the next one, same technique, add up our debits, add up our credits, and the difference between the two sides comes to £2,045. Now I think we can quite clearly see on this one that the debits are higher than the credits, therefore the balance carried down to balance off the account would go on the credit side. Okay, so we can select credit. Then on the last one, okay, again, add up our debits, although we don't really need to add it up because one transaction. Then add up our credits, do the difference between the two, which comes to 14,254. And again, we can quite clearly see that our debits are higher than our credits. So the balance carried down going on the lower side would go on the credit side. So that wraps up task 11 and actually finishes off this mock exam. And that concludes this Introduction to Bookkeeping mock exam walkthrough. Hopefully you have found it useful, and if you did, hit that like button and subscribe to the channel for more AAT content. Thanks again for watching. I'll catch you in the next one.